Good morning, good afternoon, everyone. Welcome to another free webinar series. It's Passive 360. Thank you for joining. Let me start sharing the screen. Today's topic will be Passive 360. And if you miss any previous webinars, feel free to watch in YouTube channel. And disclaimer will be like this webinar is provided for educational purpose only. You're free to accept or reject all investment recommendations made by us. All services that we offer are subject to market risk and may result in loss to your investment. And please consult a professional advisor before investing. And a little bit about me. I'm the founder of Usha Investment Group. I'm both active and passive investor. So far, invested 1,000 plus units in as equity partner, and also 64 units as GP partner. I'm also organizer of MULTIFAMILY AP360 virtual conference and also host of podcast MULTIFAMILY AP360. Also author of book Creating Wealth Through Passive Apartment Investing. And feel free to type your question in chat box. And today's topics will be on identifying goals, passive versus active, finding opportunities, and due diligence, 3 levels: sponsor level, market level, property level, and tracking returns after investing. And then diversifying by asset class and market and sponsor and exit. Let's start with identifying goals. So it is very, very important to identify your goals. And before that, you need to aware about your total income and total expenses. Then you have to manage your finances through budgeting, savings, and various investments. So you need to set realistic short-term and long-term financial goals, so that align with your total income and current income and net worth and expenses. Let's move on to next one. I'm just throwing one multiple scenarios. If you invest passively in any multi-family deals or any commercial deals, these are some kind of scenarios. If your annual goal is 10K and yearly cash and cash, there are multiple scenarios: 6% cash and cash, 7% cash and cash, and 8%. If you go with 6% cash and cash, if you invest 166.67K, so you will achieve 10K per year cash flow. That is called cash and cash. And if cash and cash is 7%, and if you invest 142.857K, you will get 10K. Similarly, another scenario, if cash and cash is 8%, and if you invest 125K, then you will achieve 10K. Similarly, another scenario, if you want to achieve 50K annual returns with 6% cash and cash, you need to invest 833.33K. And same thing in different scenario, it's 7% cash and cash. If you invest 714K, you'll achieve 50K. And with 8% and 625K, you will achieve 50K. If you want to achieve 100K cash and cash or annual returns, you need to, with 6% cash and cash, you need to invest at least 1.667 millions. With 7% cash and cash, 1.40 million. With 8% cash and cash, you need to invest 1.25 millions. Let's move on to the next one. So there are different scenarios. So if you invest 50K and if you get 20% returns, that means your equity or your capital will double in 5 years, right? So in 25 years, the 50K will become 1.6 millions. Similarly, another scenario, if you're getting 25% returns, that means so your 50K equity will be double in 4 years. In 24 years, you will achieve 3.2 million. Next, third scenario is like if you invest 50K and if it doubles in 3 years, that is yearly like 33.33% of your returns, your 50K will become 6.4 millions in 21 years. And one important point you need to remember here is like when you're investing, the higher the returns, the higher the risk, higher the returns. So before investing anything, you need to ask why question. Is your why drives everything, right? So you need to understand your why, your long-term financials. It will help, your why could be anything like long-term financial security. You want multiple streams of income of wealth, and also you want to be financially free. And if you want to buy a new car, or if you want to take your family to vacation, or your daily financial needs. Your why could be anything or anything else. Then move on to what is passive, what is active. So passive means, you're investing your equity, you're investing your capital. So you're not taking any day-to-day activities. There's no stress, you're freeing up your time so that, you can take care of what you love, and also you might have heard the phrase like making money while you're asleep. Okay? Active side, if you come to active side, so you have to do all these activities like finding deals through off market, on market, through, direct selling, or, direct mailing to sellers, or, working through any commercial brokers. And you need to review deals and, determine which one is good, which one is not good, which one you can make offers on, and you can negotiate offers with the brokers and sellers, and you can coordinate with, professional inspectors. You need to do all the due diligence, before, during PSA, and you need to find the best financial options for the property. You can coordinate with, SEC attorneys to create LLCs and, partnership agreements between general partners and limited partners. And you need to travel to property and, market to do that due diligence, and you need to hire a third party property management company to manage the property, and also additional responsibilities like lender conversations, and also executing business plan, and also, investor communications, monthly or, quarterly, reports, those kind of stuff. How to find good passive investing opportunities? There are multiple ways you can find good passive investing opportunities. So these are the options I'm sharing based on my experience. Okay. So there are multiple conferences, like virtual conferences or in-person conferences, where you will find, like-minded people, like both active investors and passive investors. I think this is one of the best way you can find, good sponsors. And other one is like podcasts, like Multifamily AP360. So I invite a lot of guest speakers or guests, or experience in multifamily investing or any other commercial space. So the best way is like, you can reach out to these people and learn a little bit more about them. Other way is like, reading books, or, attending local meetups, attending, free webinars, something similar to this one. And also there are a lot of Facebook groups on multifamily or any commercial space, any asset class that you want to invest. And similar to Facebook, there are so many good LinkedIn groups also there. Next one is like, due diligence, or, how to find, right sponsors or right market or right property. There are three levels we need to do the due diligence for investing our capital. First one is like, sponsor level, always it's important, you need to like that sponsor, you need to know the sponsor, and you need to trust the sponsor, before investing your capital. And you need to know a little bit more behind sponsor, like, for the team, who is the asset manager, who is managing this property, or, who will be their property management company they're working, and also what are the alignment with values of the sponsor. Are they trustable? Whether they are capable to execute the business plan? Are they investing in their core markets? If the sponsor is, let's say North Carolina, if they are strong in North Carolina, and if they invest in out of North Carolina, how exactly they're leveraging that, either team wise or, market wise. And also if sponsors are strong in multifamily, if they're planning to invest in like self-storage, mobile home park space, you need to evaluate that also. You need to aware of that. And what is their communication? Are they open? Are they transparent? All these are very, very important, before investing. Next one is property level. So these are the important points you need to aware of, like how are the reserves, how much percentage of reserves, what is the LTV, or what kind of debt they have, how much LTV, like 60%, 70%, and what kind of loan is it, bridge loan or agency loan, and is there any preferred returns, how much is, and how about cash flow, how much cash flow for each year, and how about returns, are they industry standard, are comparable with other sponsors, and is there any preferred equity partner also there, you need to aware of capital stock also. And also what are the GPLP splits? Is that 70-30 or 80-20? And how the waterfall structure? And how about refi scenarios, how that will be executed. Next, move on to market level. You need to aware of market also, it's like all other. You need to understand or aware about that particular market. Is population growing, jobs coming to that particular market, and how about jobs diversity? How about a rental demand in that particular market or particular sub market? That market is landlord friendly. So once you invest into any deal, then you need to track returns. So there are pro forma, and also any sponsor will share that pro forma. So you can track in Excel or whatever works for you. So you will get all this pro forma from the investor brochure or operating memo number of PPMs. So you plug in your data like yearly cash flow, cash and cash for each year. Then you can track, you can update your actuals also in under actual column and track, compare. If there is a discrepancy, you can ask sponsor why there is a discrepancy. You projected 5%, but why we are getting only this much? So you can ask questions to sponsors. Then diversifying by asset class or market sponsor. So you can diversify your investments different ways, by asset class. So you can invest in, if you are investing in multifamily, you can invest in multiple ways. You can diversify within multifamily also, like class A, class B, class C, or you can diversify into different asset classes like mobile home park space, self-storage, industrial, ATM, etc. Or you can diversify into different markets. If you are investing in North Carolina, you can diversify into different markets like South Carolina, Florida, or Texas. Or if you want to diversify sponsor level, if you invest in one sponsor, you can diversify into different good sponsors. These are the ways you can diversify your investments. Then you need to plan exit. So before exiting any deals, at least maybe you need to get some 6 to 8 months time, so that you can search for next investments, a good investment. At least it will take 6 to 8 months time to find right opportunities. And also you can to avoid any kind taxes or anything, you can do 1031 and 1031 into another investment opportunities. So all these things you can do, and you have to check with your CPR, financial advisor, before doing any decisions also. And if you want to contact me, or if you want to partner with me as co-GP, or if you want to invest in any of my deals, you can email me info@ushacapital.com, or you can text me at 252-292-2604, or you can reach out through ushacapital.com. And also I'm running if you're a passive investor, if you want to move towards active investing side, if you want any support in coaching side, I can help you. I'm also starting coaching program, so I can support you that way also. Feel free to reach out to me. Let me check any questions.